Good evening, all. Ira Epstein of Linn Associates with your financial market update. And this update, with your wrap-up, of course, is for Monday, the 19th of April, 2021, about 6:35 in the afternoon. So I'm watching Today TV, and there's not a lot of economic data out. You're getting earnings reports that you are going to get, but you're not getting key government reports just yet. We're going to get something on what Chinese interest rates are going to do. There'll be more news out of Europe as to how their sales and everything are going like that. But Thursday's when our data picks up again. In the meantime, we had a pretty good break today in stock indices, and the question is, did they hold up? We'll get to that in a minute. Tomorrow we get the API numbers at the end of the day on the American Petroleum Institute. We'll see what they think of the market. Bonds and notes are fairly stable. The dollar continues to get beaten up at the expense of falling against a number of currencies, but we're down to an area in the dollar where some support might decide to show up. As we look at the weekly area chart of closes, we're down about 0.5% on the first day and a half, well, day and a quarter of trading, because we're already open tonight. Support's all the way back at the 39,000 area. When we take 3,900 area, I'm sorry. When we take a look at what the market is doing right here, you can see that you went up and you're starting to develop a little bit of some sideways action, but you haven't broke the key pattern. One of the key patterns is the market's got a consistent higher low, higher high. I've watched the TV analysts today bring up charts of the S&P versus other ratios, where it's at versus earnings, so on and so forth. And there's a theme that this market's ahead of itself. Okay. When I look at where the market's at in relation to moving averages, you're still over the 18-day moving average, which is far away. That's all the way down at 40.65. So to get there, should the market decide to break, you'd have to break through these lows. You would break the uptrend. Okay, I get it. The market, in the meantime, is going upwards and slightly sideways. I think you can see that. It does make new highs. You backed off today, but you also have an embedded reading. So until the red line in this closes under 79, the market is getting, in my opinion, bought on these breaks as traders look for the higher price with the potential of possibly the upper Bollinger Band or a window envelope. I talk window envelopes in my morning subscriber video. The NASDAQ is the same. You have your embedded reading. I see that the red line slipped under the blue today, but you still have the pattern of higher lows, higher highs. You walked away from hitting every day the upper Bollinger Band embedded in your sideways. You're certainly not in a breaking mode. In addition, today is Monday, so you had a break on a Monday, not a disaster, but you had a break. You had 132 points in this market. In the S&P, you finished the day down 20, and in the Dow, you were down, let's see, I'm sorry, I wanted to go to the Dow. I missed the Dow. Did I miss it? There's the NASDAQ, here's the Dow. So what the Dow did is the Dow was down 123. Still an embedded reading. Until those readings are lost, I say the trade is buying, looking for the markets to keep going up towards that upper Bollinger Band. If you lose the embedded reading in all three, I would expect the 18-day average of closes to be hit. And in order to get them in these markets, you will break that pattern of higher lows, higher highs. The market that is not part of this parade of stars is what? The June Russell. The market just spinning in tight Bollinger Bands. It's called a psychiatry trade. It's because you're looking for it to break out one way or the other, and it's not, and it's just frustrating as it sits at that line in the sand, the 18-day average. My advice has been to my clientele, leave it alone. But what is the trend? Well, it's trying to break down into a downtrend. In the VIX, I don't know if the pros had the guts to ride it out. I'm thinking that they didn't. You know, you look here, and this is Wednesday. Then you got to Thursday, and you're at 1657. And I think this close might have taken them out. I'm not sure. Why? Well, number one, let me phrase this correct. Each time recently you have hit a Bollinger Band, you have gotten back on the low side of the VIX within short order back to the 18-day average of closes. I don't consider that short order. Typically, it's several days or more. That's about it. This was longer. I've also watched it. It generally doesn't go more than $1 or so against the trade. Now, this went $1.03 because 1738 would have been the number that I think they would have sold some puts at, and the market closed at 1625. That's $1.13, not $1.03. And I question if they didn't get blown out. I think that if you cross 1692, there's going to be frustration because you could set up higher lows, higher highs. It's just what happened, and you tell me the number it went to, and it lost the embedded reading. It all happened today. So I don't know if they hung around. Do I believe in my theory on that? You betcha. You go back, you will find that as you get to them, keep going back there. I'm not going to teach you everything here. This is a free video, folks. I'll tell you what I see. I talk about this in a lot of my other reports. That is a trade that I don't believe in it in the upside, because the upside, the market, when it does that, at these levels in the stock market, remember where we're at, you can get a heck of a rally as the stock market gives you a jolt in it, 1, 2, 3. On the downside, because you're already going into where you were last year. And if you looked at my weekend video, I think I covered it there this weekend for you, I show you're at the top of that range pattern. I don't think you're going very far. In the T-bond market, you've lost your upside momentum. Okay, I think the bullishness has come out of the market before price has. You still have the trend up, but you've hit your upside target right here at the Bollinger Band. You were not embedded. I say the pros come out there. Market's correcting, and now it's lost the embedded reading. The odds favor. Price is going back to that 18-day average of closes to regroup and figure out what next. In the bond market, 10-year note market, you got up there last week on Thursday. I know what I told you then. Go look at the video. I would have said, I'll bet you the pros are taking money off the table, looking for their retracement. And that's just what I think is occurring here. When we come to the dollar index, I'm going to get rid of today's action. So you're making your first challenge of the lower Bollinger Bands here. You didn't hit it that day. This is Thursday. The low is 91.49.5. And that is the lower Bollinger Band. I think the pros actually came out of a chunk right there. Now, if it keeps going down, what would I have said? I think the combination of these two could be important. So the market goes up on Friday and cracks right into the two of them today. I don't pick bottoms, and I'm not telling you to buy. I'm telling you I think the pros are coming out of their shorts. If you were on the phone with me, hi, Bob. Yeah, it's down, but it's just embedded today. It's at some key numbers. You know, on rallies, maybe take a shot at the market. You know, I would have my jargon that I go with the clients. In the other markets, in the euro, well, you got up to the upper Bollinger Band and you stopped with an embedded reading. They're mirrors of each other. They're doing one after the other. Both are now locked in bullishness and bearishness, but I do think the pros took money off the table. This is a little behind the dollar. The combination of the 100-day and the upper Bollinger Band comes in around 120.85. It's been a nice rally. And it does have the embedded reading until they're lost on the bullishness here and the dollar on the other side. I haven't changed that I'm bearish the dollar, bullish this. But I do think that I'd be on that phone, Bob. You know, got what I'm saying? In the British pound, the first challenge, when you're not embedded of an upper Bollinger Band, I don't care how high it goes. That's where I think that a lot of money came out of the market today. Market can do whatever it wants. I think the market was being bought by a group of pros right through here, looking for that. Now that they got it, I think they back away from it. In Bitcoin, well, how much of a decline did we have? So if you take a look, this is Friday, and today you were down about 10%. And I know people were talking it was down 15, and that's okay. You did take out this low. You lost your embedded reading when? Well, let's just see. Did we have one? It's fun to look at this stuff, but that's it. Now, they are coming out with a new Bitcoin size. It's a really small contract, and that should gain some popularity. But both numbers over 80, both over 80 on Wednesday, and come on, both over 80 on Thursday. By Jove, you got the embedded reading. So until the red line closes back under 79, I say the pros are nibbling in on the market, but getting out at the same day. Let me come back so you can see it. I think they're nibbling in, and on Friday, that reading's under 79. As far as I'm concerned, the pros are out of the market. Out, out, out. And I'm talking from the long side. This is not a surprise to me. I was looking for this number, the 18-day average of closes, and the market offered a bit more than that. In the differential between the Brent and the WTI, you fell back to that line in the sand. You see it. You did that. If we take this back here, right here was the day. That was last Wednesday. So that's where you're fighting your battle, right there. Momentum stayed in favor of WTI, and it still has, as you can see. When you're looking at these, you are overbought. You hit the upper Bollinger Band. I'm sure there's a group of people out there aggressively buying it. A guy like me would be telling my subscribers no. And I'll leave it at that. They know why I write about it. WTI, same thing. Overbought in rebob. Okay, what about embedding? Day one, that occurred today. Tonight could be, excuse me, day two. Got to get a little further with it. Certainly the trend is up. I don't think I've been anything but unabashedly bullish in this market. I think you're going to make new highs, but the technical work just isn't there, and I'm a technician at the end of the day. Being a technician, a tool during the day that I sometimes use to say, you know, here's my entry point, because I put out 2 updates a day for my clients in writing. I put out a full update in the morning, and sometimes I show the pivot points in that subscriber video as to how I'm using them. But during the day, I'm looking if I get caught in the market. When I say I put out a recommendation that my clients got caught in. And from there, I'm saying to them, okay, we're in trouble. I want you to do this based on, and I'll use the pivot points. Can the market get back to a number to ease the pain of being wrong? Notice I speak wrong a lot. Profits take care of themselves. It's when you're wrong, it's money management. It's saving it. Move on from it. It's the hardest thing to do. You will not find anybody on TV that doesn't talk about the pain that these new traders that went with Robinhood and that have to go through in order to learn to be traders. It's just like going to school. There's going to be pain. They've decided to come in the market and learn the tools. There's pain. You get to my age, it's not as much pain. Just the way that it is. I've seen it before. And when you've seen things enough times and you can understand them and put together your work based on it, courses and so on, and explain it, I think that helps. In any case, if you'd like to learn this, it's a 3-part free, F-R-E-E, video series. Go to our website, free offerings. You'll see what else we offer, and we'll put it in your hands. I'm Ira Epstein. Have a great day.